Hello friends, in the series on the income tax cases, today we will discuss a very important case. The name of the case is SARAF Exports versus Commissioner of Income Tax. This case has been decided by Honorable Supreme Court and the date of the judgment is 10th April 2023. In this case, the assessee was the applicant. Already the High Court has decided against the assessee, so the assessee was before the Honorable Supreme Court. In this case, the assessee was claiming the deduction under Section 80IB. Section 80IB talks about the deduction in respect of profits and gains from some industrial undertakings other than infrastructure undertakings. During the assessment year, the assessee was in the receipt of duty entitlement passbook scheme money and duty drawback scheme money. The assessee has taken the amounts received from these two schemes also as a profit or and gain from the business or profession from industrial undertaking and hence accordingly claim deduction under Section 80IB. When the assessment was going on, the learned assessing officer was of the opinion that the assessee is not entitled to deduction under Section 80IB for this duty entitlement passbook scheme and duty drawback scheme because in Section 80IB only the profits and gains which are from the specified industrial undertaking other than industrial undertaking are allowed as deduction. So according to the learned assessing officer, these two amounts cannot be said as profit and gain from industrial undertaking. But it was the contention of the assessee that because it is incidental to that business and it is received in consequence to that, so the assessee should also get the deduction for that. When the matter came conclusively to the Supreme Court said that Section 80IB talks about the deduction only in respect of profits and gains from the industrial undertaking other than industrial undertaking. The section is clear that it talks about only the profits and gains from that specified industrial undertaking. If anything is being received by the assessee, then that will not be claimed as deduction under Section 80IB. The court also said that duty entitlement passbook scheme money and duty drawback scheme money cannot be said that it is a profit and gains from that specified business. It is not being received by the assessee from that business, so the assessee cannot claim the deduction for that. The court said that there are 5 clauses in Section 28, Clause 28, Clause IIIA, 28, Clause IIIB, 28, Clause IIIC, 28, Clause IIID and Section 28, Clause IIIA. According to that, these amounts like cash incentives, duty and entitlement passbook scheme, duty drawback scheme money, all these amounts are specifically taxable under Section 28. So, if the assessee claims these amounts as a amount from industrial undertakings under Section 80IB, then that is not a good law, and the Supreme Court also said that if there is any decision of any High Court then in favor of the assessee, then that is also not a good case and a good law. So now this matter has attained the finality by this judgment of the Supreme Court that these amounts are taxable as revenue receipts. Friends, apart from this discussion, it is very clear in the statute that if the assessee is claiming any deduction or exemption, then the assessee has to prove beyond doubt that the assessee is entitled to that exemption and deduction. The department has not to prove that, and it is the duty of the assessee that the assessee has to tell that all the conditions are fulfilled before claiming this deduction. At the end of this video, once again I am repeating the name of the case. The name of the case is SARAF Exports versus Commissioner of Income Tax, and this case has been reported in 453 ITR page number 625. The matter has been decided by Supreme Court and the date of the judgment is 10th April 2023. Thank you, friends.